My name is and this presentation is with regards to the following question that was posted as part of our seminar at Durham University Business School. Consider you're a stock analyst and trying to offer a buy recommendation to your client. We were asked to use relevant information to identify the trading opportunity for one particular stock, and the stock could be from any market across the world. After discussions, deliberations, going through news articles and other research material, my seminar group and I finally zeroed in on one particular stock which we think is a long-term buy for all long-term investors who are out there. This particular stock is none other than Pepsico. We were so confident with our presentation that we decided to go ahead and give the stock symbol right away, because we think that by the end of the presentation you would go ahead and buy the stock, but let's see how it goes. So the agenda is pretty simple. We have adopted a top-down approach towards analyzing why we have to buy Pepsico. Basically, we will first take you through the company background, and then we did some fundamental analysis on Pepsico. Then we did some SWOT analysis on Pepsico, and then we went further down and analyzed the share price of Pepsico over the years and did a technical analysis on it. And finally, as part of the conclusion, we give our recommendation as to why one should buy Pepsico. So the company background is fairly straightforward. It's an industry. It's an industry's beverages, non-alcoholic. Although incorporated in Delaware in 1919, its headquarters is based in Purchase, New York, in the United States, with boasting a market cap of $126.75 billion and 2012 revenues amounting to $66.25 billion. We believe that Pepsico is a large cap stock that is worth looking at. It is, and we also believe that this is a stock that can grow even more. Moving on, more information on the company background. Pepsico in total have got around 22 brands. Some of them are through partnerships, for example, like with Lipton and certain coffee brands with Starbucks. But one key thing, takeaway from this particular slide would be PepsiCo's eye for acquisitions, certain acquisitions like Quaker Oats and so on. Overall, these 22 brands have given PepsiCo an annual revenue of $1 billion each in the year 2012. So we believe that PepsiCo is a company that has an eye for major acquisitions that will go on to become generate better results. This is the share price as of yesterday, although dipping in by the end of the close on Thursday. Overall, Pepsico market has really done well. A one-year change is plus 17.31% last time I checked on Financial Times, which is a pretty big number, and we believe Pepsico will continue to do even more in the future. Now, let's start for why we are actually here. We've done through the company background. Now we're going to do some analysis on Pepsico to finalize whether it's a best bet for you as a long-term investor to buy the stock and hold it. So first, we do a fundamental analysis on Pepsico, where I've compared the Dow Jones US Food and Beverages Index to the Pepsico share price. And it's very evident from the share price here that the Dow Jones US Beverages Food and Index has a plus 14.71% rise, and whereas Pepsico, on the other hand, has a plus 20.3% increase, which means it is beating the index itself, indicating that this stock is definitely a stock worth looking at because it has been consistently performing and has managed to beat the index as well. Now, many of you out there are familiar with the concept of Porter's 5 forces. We brought this Porter's 5 forces together, and we've decided to look to see how Pepsico fares when we use this concept to analyze it. Rivalry among existing competitors, the first of the forces. We believe it's high pressure on Pepsico. Main reason being, well, Warren Buffett should answer this better. He's indeed has shares in this particular rival of Pepsi, which is Coca-Cola. It's basically Pepsico and Coca-Cola involved in a duopoly market in the soft drink sector, and we believe that this particular threat is of high pressure. Threat of substitute products. When I say substitute products, it's basically switching from a soft drink to your coffee, tea, alcohol, and so on. And this particular low switching cost, we believe, gives that medium to high pressure to Pepsico as part of the threat. Threat of new entrants, we believe medium pressure. I've given the benefit of the doubt here. We believe normally it's tilting towards the low pressure because of the high spending in advertising and marketing involved, which we believe will prevent a lot of entrants from coming into the soft drink sector, and PepsiCo is already established and based in this particular industry. Bargaining power of suppliers, well, the number of them makes it a low pressure because there are just too many suppliers out there, and raw material cost is actually very less. So we believe that the bargaining power of suppliers is indeed a low pressure. Final force of Porter's 5 forces is the bargaining power of buyers. Who are the buyers? The fast food chains like McDonald's and KFC, your vending machines and university stores and so on. We believe the number is just too high for it to have any basic threat on PepsiCo's performance. Now this is the summary of the Porter's 5 forces, pretty straightforward as I've explained before. I'm not going to spend too much time here. Now we're moving on to SWOT analysis on PepsiCo, and here in this slide particularly I'll be analyzing the strengths and weaknesses of PepsiCo. Well, a key strength I would rather say to look at for investors out there is the corporate social responsibility projects of PepsiCo, because when you see a company give back to society, give back to the society that helps generate its financial performance, helps generate its revenues, you tend to feel that even the consumers, the daily consumers of PepsiCo would definitely have a brand loyalty towards it. And this brand loyalty helps PepsiCo as a strength. It's a key strength of PepsiCo because this particular social response CSR initiative is something that a company does in order to boost its image, to boost its market image. And I feel such projects are definitely a strength for PepsiCo. Extensive distribution channel is another strength of PepsiCo because it generates around 10 million stores per week across 200 countries. Is definitely a strength to look forward at. Weaknesses, the major weakness is number 4. You could see much weaker brand awareness and market share in the world beverage market compared to Coca-Cola. Well, this particular weakness, this particular threat has been minimized, as I'll explain it to you in the slides following this. Opportunities, we believe bottled water consumption growth and savory snacks consumption growth would help Pepsi to be an ideal opportunity for it to expand, and the threat would be, as I said, even the market share of Coca-Cola, but that has been minimized to an extent. I shall be explaining it in later slides. Now, we've analyzed this PepsiCo's share prices now, and then we decided to do a bit of technical analysis to see whether it's the right time for you to buy this stock or not. We did a 10-day moving average, a 60-day moving average, and a 240-day moving average for short-term, medium-term, and long-term investments. This particular slide is for technical analysis for short-term investment, where 10-day moving averages were taken. Our conclusions are: last buy point was observed at $80.69 on October 10, 2013. Sell point for short-term investment is clearly not visible. Conclusion: buy and hold for short-term. Medium-term investment, 60-day moving averages. This is the indication. This is the graph. Last buy point 82.27 on October 16, 2013. Next sell point for medium-term investors is clearly not visible, and the conclusion is buy and hold for medium term. On the long term, 240-day moving average. After doing the analysis, we find a last buy point did occur sometime before 2013. Now, before any of you panic, the good news is that the next sell point is clearly not visible, although the indication is that it is due to arrive by the start of 2014 or middle of 2014. So we suggest buy before end of 2013 or the starting of 2014. This is the summary of technical analysis, where we observed buy and sell signals by comparing the 10-day, 60-day, and 240-day moving average. I'm not going much into it. Why buy PepsiCo? We come to the final phase of this presentation. Now, the PepsiCo share price yesterday was around 81.90. We believe, and after doing our research, most analysts believe that the median should be at around 89.5 for the next 12 months with a low point of 85, which means if I were you, I would definitely go ahead, and if I'm interested in buying PepsiCo, I would definitely go ahead and buy the stock, because it sets to outperform the market. It sets to grow even more in the next 12 months. And for long-term investors out there, dividends, I'm sure, is a very key factor when considering what stock to buy. And the dividend growth of plus 5.06% over 2014 definitely gives PepsiCo an edge towards considering as a good long-term buy for investors out there. Earnings history, annual earnings are set to grow by plus 3%, which is definitely a good indicator. And this particular news deal is what I was talking about when I said Coca-Cola's threat was minimized, because this is a 15-year, Pepsi recently signed a 15-year deal with a company called Britvic to supply the kids drinks, which is a new segment in itself. And this deal, I'm sure, will help PepsiCo outperform Coca-Cola in the years to come, and thereby minimizing the threat from its rival. Conclusions: technical analysis recommends a buy on PepsiCo. Fundamental analysis recommends a buy on PepsiCo. Forecast suggests PepsiCo is a fantastic buy as it sets to reach new levels in 2014 and beyond. Based on our technical analysis and factoring in the previous buy points, we recommend a limit buy order at $84, which means the current price is $81.90. Ideal time to buy $84, $85. So 2013 is nearly coming to an end before the next sell point for the long-term moving average comes. It's always good to consider a buy. I hope you have enjoyed the presentation. This performance with purpose is actually Pepsi's initiative with the main purpose is to deliver financial performance year in and year out, making it a good long-term buy. These are the references. I hope you have enjoyed the presentation. Thank you very much.